Hail Sean Maloney, Digital Business Masters. Welcome to another DBM strategy overview call, the most powerful information on the planet. All right, it's without dispute now. If you're watching what's going on at Bitcoin Mena over in the Emirates at the moment, you'll know what I'm talking about. This is language that we did not expect entering 2026 when we were sat back in 2016. I mean, we started off as enthusiasts and intrinsic understanding of the failure of the fiat system because of 2008. And now here we are. Everything is coming towards us. So if you've been accumulating Bitcoin over the past decade, well done. If you've been working in various ways to create cash flows in your business, your digital business over a similar time frame, well done. If you've just started out, well done. Doesn't matter where you're on the spectrum. You have to make sure that you understand this information and use it to fire up your next episode in life. Whatever you want to create, you can create with your digital factory. It's entirely up to you. So every week we talk about all the backbone to that. Where does all that exist from? Where is that confidence come from? How come we're more confident now than ever before? That's what part one's all about. Then in part two, we'll show you exactly how we put the rubber on the road, how we actually convert the awareness of geopolitics and macroeconomics and convert it into our own success as individuals, and individuals who crucially understand how to run digital businesses. So that's part two. Okay, you're more than welcome to stick around for both. If you're listening to this on YouTube or our other channels, click the link below to access part two. We're not here to give you any financial advice. What you do in your business is your business. Just mute yourself, Alan. It's entirely up to you whether you create what I talk about or not. Okay, some people can do it, some people can't. Obviously, just like getting fit in the gym or any form of life, we're not here to give you advice. We're not here to do it for you. You have to man up, woman up, get the skills, get the resilience, get the fortitude, and make sure that you push through to your ambition. That is the process we're in. We don't advise you on that, but we'll support you and we'll give you structure and we'll show you how to use education to put yourself on the front foot. Now, before I go into the details, just a quick reminder, as I do every week, what a lot of people find very difficult, especially now. I mean, it's a different form of difficult. This was always difficult, but now this is becoming front and center what is actually happening in terms of you as a owner of sound money. You are, by definition, very, very close to the center of the money supply. Now, the minute you get close to the center of the money supply, you are automatically embroiled directly. You'll feel it. You'll feel it every day, every week in your business, that you are directly involved with the likes of the Federal Reserve, the central banks globally, the governments, etc. Now, you already are, and you already have been affected by that, but you've not felt it as much because you've been on the peripheral. You've been on the edge. Okay, you've been employed. You've been self-employed. Yeah, you've maybe hoping a pension will save your future. You're in hopium over there. You know it's happening. You feel something's wrong. You can feel prices are going up. If you think that's the case, then you do not understand. And the whole idea is when you start to move into the realms of owning sound money, you are directly linked to central bank, central government policy, and you feel it. And it can be a little bit unnerving when you first experience that. So those of you who've done the blockchain, builder courses with me over the years, 6 or 7 years ago, we created this slide. In fact, we wrote a book on this, co-wrote a book on this. The whole idea is that once you understand it, it doesn't frighten you anymore. In fact, quite the contrary, you can take full advantage of it, which is exactly what's happening now as we enter 2026. So understand the macro level and don't be frightened off. How do you stay the course day to day? Well, you fundamentally understand the difference between buying liabilities and funding liabilities. If you're still buying liabilities and you're in your 40s, 50s, 60s, you have completely missed the way that the world operates in a business point of view, right? There's a reason why the wealthy are wealthy and the people who are predominantly employed are not. And the main reason for that is because people go out there with skill and time and effort and frankly waste time by simply putting hours into the accrual of fiat currency. That's what basically happens, okay? And that needs to stop. Okay, mute yourself, guys. That needs to stop, right? Now, of course, you still need to be out there earning an income, right? And we're acutely aware of that at DBM Academy, of course. We understand that people work predominantly. They have a job. And then when they get to the 40s and 50s and 60s, they realize that that job they've been working all those years isn't quite enough for them to be able to feel comfortable, for God willing, the other 20 years that they're still going to live. We're very aware of that, right? That's why I said what I said earlier about owning sound money. Now, moving your lifestyle into different ways to learn how to convert proportions of income into cash flowing assets and accretive assets is a skill. And converting that into a method of life that means that you fund liabilities and stop buying liabilities is a skill. And lots of people, in our experience over 6 years now of the Academy and well over a decade of us working with people in this manner, the vast majority, I'd say as high as 80%, 85% of people don't appreciate what it is to make that transition. So what they do is they'll throw money into things. They'll try their best to try and catch up with what they've not done for the past 20 years. Hopefully they're going to buy success. Hopefully they get a quick win, right? And then they run out of money again, or currency most of the point. And then they end up pushing back in all sorts of ways because of their failure. And they'll perceive that failure. They'll project that failure onto other things. That's the way normal people work, okay? So we are aware of this at DBM, and we've gone through the process hundreds of times to try and find reliable ways in which people can convert a proportion of income into cash flowing assets. In fact, moreover, to take people through a process of earning income in the online space. Yeah. Now, that in itself is a whole skill set before you even get to the accumulation of assets. So what we've been doing for the past few months at DBM actually is defining ways that are easier for the average person to create what we're looking for, which is sustainable, reliable income, right? Not going out selling, not going out trying to get people to buy stuff, not going out trying to allocate assets to create yield, not going out there trying to turn a sow's ear into a purse and all the rest of it, but really simple daily activities that will assure you of an income. A lot of these activities you're doing anyway. That's the crazy thing, right? But we've found ways that you can create consistent income, right, per hour, paid weekly, that put you in a position that you can start to put fixed income into your business and not be so reliant on variable income, because variable income is a challenge. So we'll talk more about this in part 2, but module 5 of the Wealth Builder series next month very much covers this. So if you're not already in the Wealth Builder series, make sure you register today. Now, the broad model that we operate at DBM above and beyond that. So once you've mastered income, and most people have got some level of income, that's why you exist, you've got a job, right? It's a case of converting a proportion of that income over to sound money. And the predominant way that's done is to simply dollar cost average Bitcoin. Yeah. Now, again, in our experience, lots and lots of people fail to do that because they're living month to month. They're that far behind the line that they've got actually more month than money. Incredibly. Yeah. And as they get older, they figure that, oh, well, this isn't going to get any easier because the base of fiat currency is 6 to 8% per year. You know, and I'm sat in my 50s and 60s, and God willing, I'm going to live well into my 80s. And my pension's not doing anything for me because I didn't realize that the debasement of fiat was so aggressive. I thought I was putting in X thousands a year into my pension. Now I realize it's not enough to even keep me going for 5 years. So the whole point is you need to take control and start to allocate increasing proportions of income into sound money, And like I said, if you've been doing that for the past decade in Bitcoin, for example, and you own more than 0.1 Bitcoin at this stage, then you've created it, you've done it. You've got yourself on a place whereby you're able to take control. If you've been allocating that effort and energy into banks and institutions and pensions and all these places that take the money off you in the moment with a promise and assurance of giving you something back in the future, you've lost. And you're losing every day. So that's the hard truth of it. So the whole point of the DBM model is accumulate sound money. It can include gold as well. Well done if you've been accumulating gold over the past decade as well, given what's been happening with gold over the past 24 months. And now you can balance both off each other, right? But Bitcoin is by far the superior asset. So we accumulate that based on 68% CAGR average. If you don't know what CAGR is, then get yourself educated in the academy. And then you convert proportions of the equity across to cash flow, as I said earlier, right? So you've got variable income and fixed income. So there's lots of ways to do that. We talk about that much more in part 2, and it's up to you to get the skills and most of all, have the resilience to be able to push through whatever you decided to get involved with or decide to get involved with in the future. Know every stage of the way, this is not easy. Why would it be easy? It isn't easy. Now, to help it become easier, we utilize AI these days in the academy. The academy, DBM Academy, is 6 years old this year. We must be doing something right. Yeah, we're still here. We're still as passionate as ever. In fact, we're more passionate than ever. Right? Lots of people out there push, shove, have opinions and everything else. Lots of victims in the world. But those who understand and those who stick the course are absolutely on the road to success. So this month in the Wealth Builder series is all about tools of the trade. All right. Previous months, it's been about security. It's been about mindset. It's been about setting the scene so that you can sustain what it takes to put a platform under your business for 12 months. It's a 12-month building process. Again, a lot of people won't even entertain that, just like people leave the gym in March. They just don't want to put the work in. But it will take you around 12 months, if you're serious, to build a proper foundation that you can go on and build a real income from, and best of all, wealth, well into the future. That's what this Wealth Builder series is all about. We've distilled decades of combined experience that we have as a coaching team, put it through the AI systems, and the AI system has come up now with a very, very succinct model that allows us to move forward in a very, very productive way. So if you're not already involved with the DBM Wealth Builder series, get yourself registered today. The link's below, and we'll put you on the right course, okay? Because it's very important to take into account what's happening from here on in. From 2026 onwards, it's actually been from 2025 onwards, actually. We're now got huge tailwinds behind us. So if you've been working with us as far back as, 2016, 2015, 2017, etc., that's how long DBM's been around. And dollar cost averaging its way into Bitcoin. If you've been around that long, then you'll know that we put up with an awful lot more challenges than we face today. They're just different challenges today. Yeah, it's a little bit more opaque because you've got a lot more institutional and government policy influencing what's going on. So it's a journey of discovery for all of us. All we do know, based on mathematics, based on supply and demand, based on evidence, based on logic, is that it's inevitable that over time, Bitcoin will keep hitting more and more and more all-time highs. We are going to hit volatility. So if you are using leverage, if you're losing collateral, you better make sure you know what you're doing. Right? So very important to know your numbers. That's why, as I say in part 2, got a whole toolkit of things that you can use in order to protect yourself as you go through all-time highs and higher lows. Right? Just expect that. But it's a long game, Bitcoin. Well, not as long as pension plans, but it's a long game either way, just like any asset should be. So it's slow accumulation, but with the equity and mastering fixed incomes, you'll be able to organize yourself very, very well. So we're chasing 126. That was the all-time high in 2025. We're going to go much higher than that, obviously, in coming years, starting very soon, I would expect. Now, where do we get that confidence from? Because we are students and enthusiasts when it comes to macroeconomics and geopolitics as it pertains to particularly digital assets. That's what we do every day. We're full-time at this. I've not needed to work for years and years and years because we fully understand what we've achieved inside this industry. And the backbone of it is obviously Bitcoin, but the whole idea is we understand how to leverage that equity into all sorts of cash generating activities, which we'll talk about in part 2. Now, in terms of the macro, the whole idea here is, as I say, every week I could fill pages and pages and pages of this because there is so much going on. So we do our best to distill it, and we do our best to make sure we fact checked everything, okay? Because there's lots of information and misinformation in the world, and it's a case of us making sure we give you the best quality we possibly can every Monday at the DBM strategy call. So this week, just in a very brief nutshell, today we've got Anthony Popoliano's pro-cap trading starting over on the main markets. That's a big deal. Just as we have tomorrow with Jack Mallers 21 trading on exactly the same markets. So these are going public now. These are public markets, right? These guys are slipstreaming in many ways strategy, but they are equally important to what strategy is doing. And of course, on Wednesday, we've got the latest information coming from the Fed with regards to interest rates. 86% chance that they will take another cut, probably 25 basis points. That inevitably always leads to price discovery in sound money assets. So probably already been priced in. But then we've got the FOMC meeting, which will tell us what they're thinking of doing in January and February. That's what moves the markets. So we've already seen some wind back in the sales of Bitcoin, and we'll expect to see more as we go towards the end of this calendar year. Mike Saylor's strategy buys another 130 Bitcoin last Monday. I think there's another buy going on today. He tends to make the buy just before the New York Stock Exchange opens, so that's in a couple of hours from now. So there'll be another buy this week. He always announces this ahead of time. If you're watching Strategy's website, it's very, very easy to track what they're doing. So more and more and more Bitcoin being taken off the market. That's what that basically means. And also, Master announced the formation of a 1.4 billion US dollar reserve and an increase in its Bitcoin reserves to 650,000. That was of last week. There's lots of FUD, lots of keyboard warriors, as ever with this industry. They don't really know what they're talking about. They really don't. These people, you've got to avoid them, and you've got to stick to working with the people who actually call the shots. Okay, so raising that 1.44 billion is just a way to show that they have got the reserves in order to cover their liabilities, and that's all you need to know. So if you are working in the realms now of operating with Anthony Pompilano and Jack Mahler and Mike Saylor, in other words, if you're doing what we all did in DeFi, well, most of us did in DeFi back in 2017, 18, 19, and now we're putting it into TradFi, if you're working in that area with what you're creating from your digital business, then, make sure you understand what you're working with. And a lot of it, unfortunately, is still being manipulated by the hegemonic banking system. But that's okay, because it's a long game. It's just like working with Bitcoin, working with these treasuries. It's the same type of thing. You've just got to look through it and see the logic of the mathematics. It's not difficult to figure out if you've got the skills. So the whole idea is to make sure that, you do that. And we're certainly looking at that and working it ourselves inside the academy. Vanguard to allow clients to access cryptocurrency ETFs and funding that started last week. Okay, so that's a big shift in policy. You'll see this over and over again with these hegemony institutions. Companies like Vanguard were dead against anything to do with crypto up until very recently, despite being the largest shareholder inside companies like Master. And now they've just completely changed the tune. Right? They've watched the likes of JP Morgan and everything else, and it's shifted. It is what it is. The fact that they shift that quickly just gives us more reason not to trust them, frankly, which is why we'd always encourage people to use self-custody in their personal journey and not be too exposed to these institutions, because they've proven they are not to be trusted. Stablecoins beat major economies. Okay, stablecoin enters the top 20 holders of US treasuries, ranking above Saudi, South Korea, Israel, Germany. Okay, the UK is the second largest owner of US treasuries in the world, by the way, and that's a lot to be said for that. You've got to be very careful for those of you in the UK. But in terms of the company side of things, then stablecoins are now becoming a bigger part of the reason that US treasuries will try to make sure that they maintain hegemony and try to maintain the dollar in its current form as the reserve currency. But it's all going to be built now off stablecoin acquisitions. So we've said that before. Watch a few weeks ago on these calls when we're going into that in a bit more detail. A reminder that this entire bull market has occurred in a vastly different liquidity environment than prior bull markets. That's true. We put some charts up on this last week in the channels, so go and have a look at those. Okay, the big print is back. We know that. Today's price is an absolute gift. If you've got yourself in a position, as you say, with fixed incomes, you've got yourself in a position with regards to variable incomes, you've got yourself in a position with regards to the accumulation of collateral to acquire more Bitcoin, own more Bitcoin this month than last month. That's the mantra. If you're managing to do that at this price point, it's kicking you forward a good 6 months, 12 months faster than you would have been doing if the price was up at 126, right? Now, most people, of course, especially the tourists, they'll come in, okay, the degens. So I've got a few of those people in the academy, unfortunately, but the degens will tend to just panic at the point of drop, at the point of the market fall, because they have no clue what they're doing. At that point, you accumulate. And if you are selling at that level, you just do not understand what it is you're involved with. You shouldn't even be involved in the market, right? If you're just buying on speculation and hopium, go and stick to the day job. If you understand the power of buying as low as you can and accumulating DCA no matter the price, then you'll be very successful indeed. It's as simple as that. For the first time in history, US market assets have smashed through 8 trillion. Again, when you can see this and you see it for what it is, right? 8 trillion in the money market sat on the sidelines, not even yet involved. Then you recognize the inevitability of price discovery in sound assets. The manipulation in gold, okay? It will go on and stays on because it's wrapped in derivatives. Bitcoin will head the same way, but there's a window of time whereby we're able to take full advantage. You don't need that much. 0.1 Bitcoin will see you right over this next 5 years. It's a case of making sure you get there, okay? Because all this outside market money is sat on the peripheries. And once you know this, and you're able just to observe, touch grass, and put yourself in a place of empowerment. 1.5 trillion, again, more T's, $1 trillion, Merrill Lynch to begin recommending Bitcoin to client portfolios. Again, just jumping on the wagon all the time. You can tell just how behind the curve these financial advisors are, these institutional established players are. They're just so far behind the curve. It's taken changes, which we understand to a degree. It's taken changes in government policy. It's taken changes in macroeconomic activities. It's taken changes in the highest levels of the way governments operate, of course, for these companies to have this ability to move. We get that. But come on. You know, what is not to get? The fact that they kept the hegemony of the fiat system going for as long as they have, up to 2025, especially after 2008, tells you all you need to know about their real motives. It did not take governments to change if they just wanted to do the right thing. That's why you can't trust them. And we never will in our lifetimes. Coinbase says market conditions could be primed for a reversal in December as Fed reserves could cut rates and unlock inflows in its latest report. That's true. $13 billion of printed currency come through in the last week on the 1st of December, as we reported last week. The Fed has now gone in to QE again. Stop QT, gone into QE. Right? That's what we're talking about with these different liquidity environments. So now we're just going into QE. First time we've been in QE since late 2019. Right? And if you look at the charts from 2019 to 2021, you'll see what we may expect now with Bitcoin into 2027. That's where we're at right now. It's easy when you can see it, right? SpaceX reportedly moved nearly $100 million into Bitcoin last week, on Friday actually, signaling a major institutional shift in their strategies, okay? And Musk is getting more and more vocal on this. He announced on his channels last week that he obviously understands, as does the NVIDIA chair, that Bitcoin is actually energy. Right? So that's what's really behind all this. They're monetizing energy. And if there's two people in the world that fully understand how to monetize energy, it's NVIDIA and Tesla. Okay? So that's the point we're at. That's where we're in. And it's a case of making sure now that we capitalize on what we've been doing for many years, many of us well over a decade. And if you're just starting out, or you've just not got enough because you've not had the volition or the ability or the focus or the determination, then get moving, because this is where your next 5 years plays out. Brian Armstrong also understands this at Coinbase. Tokenization is the future. It's time to bring every asset on chain. And that's happening now because we're getting more and more governments talking about this. Tokenization is reinventing finance. That's absolutely true. We've known about this since DeFi back in 2018. It's just been a bit of a Wild West getting there, right? We've tried all sorts of different things. Those things are still in existence. Those things are still under management. Those things are still projects that we look for and are active with. Nothing's changed on that regard. It's just having the ability for you to stick the course, which is what we spend most of our time helping people do now in the academy, in actual fact. 12 trillion, another T, $12 trillion this time, giant Charles Schwab, just confirmed. Again, I'm scattering these in the whole thing because you can see it's a bit of a joke. Confirmed Bitcoin trading launches early 2020. They're all jumping in. Vanguard, Charles Schwab, JP Morgan, you name it, Bank of America, they're all in. They're all in. They know now they've got to keep up with Master. And as soon as they lift the shackles off, or as soon as it becomes irresistible for Master to push forward, they'll become much, much bigger than any of these banks combined. So the whole thing is very interesting to observe, especially if you own Bitcoin. Strategy moved 1 billion of Bitcoin into Fidelity last week. Okay, so that's working the bank system. Remember, them raising that 1.4 billion in terms of having reserves, them, the strategy, moving their Bitcoin between these institutions is just playing the game so that they can soften up what they need to soften up in order to get listed as above a junk bond, right? It's obvious what's going on. It's very easy to see. Doesn't really matter to us as private Bitcoin owners, like I say, holding self-custody and work it through. But if you are working with these treasury companies to create dividends and create yields, then you do have to understand this stuff. And it's why it's so fascinating to watch ahead of the curve. We're way ahead of this curve. Normally, and people in your family and your peer group, they're just going to be trodden all over with this yet again, just like they were in 1999, just like they were in 2008. Probably like many of them were back in 1979. The whole idea is now you know it. And if you've been listening to what we've been talking about for the past decade, you'll be ahead of it by ownership. That's the point. The Commodities Futures and Trading Commission just announced a new Bitcoin and crypto trading platform. Okay, so now it's not just institutional now, it's deep into the structure. So the CFTC now have announced their own crypto and trading platform, right? That's a very, very big deal indeed. And that's just more symptomatic evidence of government policy and deregulation, which is what we've been looking for many, many, many years. Tom Lee, big Ethereum advocate, obviously, he's doing the equivalent or trying to do the equivalent in Ethereum as Mike Saylor has done in Bitcoin. He thinks Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to a Bitcoin, that's a $62,000 Ethereum price. Now, that's ambitious, given that it's today about $3,000 roughly. Okay, but as we've been talking about Ethereum since 2017 when it was 50 cents. We didn't know this was coming then, obviously. But those of you accumulating Ethereum, just like you've been accumulating Bitcoin, that's the whole idea. Be well ahead of it. That's how simple in many ways it is to get ahead. Yeah, owning thousands of Ethereum because you've been accumulating from 50 cents. Now, that takes volition. That takes fortitude. That takes absolute understanding. That takes skill. Okay, but there's a long way to go yet, up to 62 if you're just starting to dollar cost average today at 3,000. Again, it's all about fixed incomes and variable incomes. But having this information will give you a much better ability to be further forward with your decision making over this next 5 years. And just Bitcoin and Ethereum on their own can put you in a position whereby you're much, much stronger than you maybe imagine today. JP Morgan says it's sticking to the Bitcoin versus gold model target, which is fair enough, which would see Bitcoin hit 170,000 in the next calendar year. Okay, great. JP Morgan getting more and more vocal about what they think. That's because they've got obviously big clients to think about and lots of, let's say, baby boomer clients that have either not got time or it's not of interest to them, but it will be of interest to their kids and grandkids. Right? And JP Morgan know that. So they're putting out a lot of these channel issuances at the moment, which is what we're picking up on. And it's fair enough. I mean, if you'd have said to me even a year ago that JP Morgan would be putting out public announcements that their Bitcoin gold model target is it's $170,000 per Bitcoin, I wouldn't have believed you. I wouldn't have believed you. But there you go. Late 2025, right there. Fidelity CEO personally owns Bitcoin. Now again, Fidelity, as I said, fought and kicked but behind the scenes, a bit like Jamie Dimon, right? The actual bosses, in fact, the top boss, Abigail Johnson, CEO of 16.4 trillion Fidelity, revealed just last week on Thursday that she owns Bitcoin. She calls it the gold standard for modern saving and long-term store of value. Where was she 5 years ago? Now, I get it that they've got policy, and I get it that they are basically working for the financial system. I get it, right? But it just again shows you what you're dealing with, especially if you've been working with financial advisors in the traditional system yourself over the past few years and blindly just putting fiat, debased fiat that is, into your pension pot under their direction. And behind the scenes, they've been accumulating Bitcoin. Need I say any more? Last but not least, geopolitics, very much intertwined with macroeconomics. They're actually absolutely intertwined now. It's quite difficult to tease them apart now. So all I can do is just look for indication with regards to policy and mention of government. So UK, again, chasing again. UK just letting itself down time and time again. Not quite as bad as Europe, or the EU, I should call it. The EU. Not quite as bad as the EU, but it's not far off. The UK officially recognised Bitcoin and crypto as property under law. Well done, finally. Obviously doing that mainly so they can start to go after the tax grab, obviously. But at the end of the day, it gives us foundation now on which we can build in a more, let's say, organised environment, to put it politely. The standoff between the Eurocrats, okay, this is the bloody EU, and member states is getting very evident now. Hungary especially, a lot of the old Eastern Bloc nations, Poland, okay. Poland's president just vetoed the anti-Bitcoin law, okay, last week. Europe members are increasingly pro-Bitcoin, right? But the EU's not, because it doesn't suit the bureaucratic base of what the EU has become. But it doesn't matter, because the people, us, do what we're doing today. We vote with our feet, we go with our actions, right? And then it echoes into your communities, it echoes into your country, and sooner or later the country will find it needs to move away from what is basically Strasbourg and Brussels. That's the EU. Everywhere else is Europe, right? So the Italians will be out next, right? You'll find the Eastern Bloc countries moving. They're all going to need to move. You'll end up with France and Germany in a silo, right? They've already corrupted and destroyed themselves from within. We know that. It's just a case of making sure that we look after ourselves individually, our families as best we can, and then we see how it all shakes out. But unless they change what they're doing in the central of that Brussels bureaucratic institution, they're never going to be able to look after 410 million people. National Bank of Canada buys 1.47 million master shares worth 273 million. And that's off the back of now the ex-chair of the Bank of England, right? So he's bending the knee as well. About time. SEC Chair Paul Atkins, the US markets will be on chain within 2 years. And that's a big deal. Keep an eye on Paul Atkins. I talk to you every week about who you should be following and, making sure that you're following quality and not all these victim naysayers everywhere, these people who try and build success out of failure. Focus on people who are organ grinding here. And Paul Atkins is one of them, so you may want to keep an eye on him. UK tax rules could trigger a crypto boom, according to Aave founder Stanley Kulichov. Met him the other year, actually, at an event down in London. He says the UK new HMRC guidance on DeFi lending and borrowing could be a major turning point for the crypto industry. Yeah, that is true. Okay, so fair play, UK. UK will catch up, and at least it can catch up quicker than the EU because it's not wrapped up in all their ridiculous rules. So, UK will move alongside the US in terms of its policy. No question, it has to protect the Bank of London, the Bank of England, and mainly the City of London. So it will do whatever it has to do, despite kicking and screaming and being late to the party yet again. Okay, and the government that the UK currently has not got a clue about value generation and wealth generation. They have no idea. They've just put a load of under 25s on a scheme to have to get jobs inside retail and leisure industries that the government's going to pay them. Utterly ridiculous. France's third largest bank, fair play to France. France seems to be doing quite a bit in the background as well, to be fair. Again, their government needs a lot to be deserved, but France's third largest bank to offer Bitcoin and crypto trading starting today. Okay, so fair play to France. There is quite a lot going on over in France. If you're living over there, keep an eye on it and keep reporting back, because it is interesting what they're doing from the bottom up, right? Even though it's the third largest bank, notwithstanding. A new Bitcoin strategic reserve bill has been introduced to Congress. Now, this is important. I think you will find other countries do this. It's already started in countries like the UAE and other parts of the world. I think Thailand did it last week. The Federal Reserve taxes to be paid in Bitcoin and zero capital gains on Bitcoin, so that what they're basically going to be doing is converting the purchase of Bitcoin back onto a reserve. Okay, and with zero capital gains, that has the effect of ordinary people obviously taking more interest in the acquisition of the asset, right? Because officially it is a currency, so there shouldn't be any capital gains anyway. So this is going to shift pretty quickly, we think, in 2026, and our job again is to front run it, which is exactly what we've done. Poland becomes, again, kicking against the institutions here, Poland becomes the only country in the EU not to pass the micro crypto bill. Now that's interesting, because you do need a little bit of control and regulation. But Poland is obviously completely disillusioned with what has been going on in the EU, mainly, I suggest, because of immigration policy. So they're using anything to kick back against the EU. It wouldn't surprise me if they decide to leave the EU, alongside some other countries, including Ireland. This slide now to finish is all about just reminding you of the structure at DBM, and it's a case of you investing in yourself. If you found half of what I've been talking about today interesting, and you want to get into more of a weekly routine of how you build the bricks, yeah, lots of people try and put the roof on before they've even built the walls in this industry, right? You can't buy success. You must go through the mindset, through skills, through systems. And if you've not quite understood that, in other words, you go flying into systems, you try to buy success too early, you put your loads of money into something, it's not worked out, and you're moaning about it, then go back to your mindset and get your skills organized so you don't do it again. Keep managing what you've already got. And as I say, Module 5, which is coming up next month, we'll show you how to create consistent income in this digital world. Not blockchain, not selling anything, not bloody marketing. How to create consistent income in your own power, be your own boss every day by carrying out tasks that will pay you as much as you want to be paid in terms of your skills and how many hours you want to put into the system. All right, it's very important. We'll see you in that call. If this was useful, click the link below and we'll see you in part 2.